Ferraro is a motorcar dealership operating since 2005 in Clarksdorp. Ferraro has grown its business substantially over the past number of years and has always been a registered VAT vendor with a financial year end of 31 December. Mr. Petrocelli is the owner shareholder of the dealership and his niece Maria has been the financial manager all these years. You are the auditor of the company and on 31 December 2018, you have performed a physical inspection of the premises. There were 5 vehicles on display in the showroom. The salesman was very excited and told you that he had sold one of the vehicles. The pre-delivery service of the vehicle had been done, but the buyer requested that they keep it in the showroom until he returned from an overseas holiday. Finance for the vehicle was granted to the buyer by East Bank and the first installment was due on 31 December 2018. All the vehicles are part of a floor plan agreement which Mr. Petrocelli has entered into with the motor manufacturer. The dealership enters automatically into a purchase agreement with the motor manufacturer at the date of delivery of a vehicle to Ferraro's showroom. Ferraro pays monthly to the motor manufacturer in terms of the contract only a certain percentage of the purchase price of the vehicle on display. These payments cease when the vehicle is sold or at the end of a 3-month period commencing on the date that the vehicle is delivered to the showroom. So, should the vehicle be sold within the 3-month period, the dealership will immediately have to pay the remaining purchase price, i.e., after the amounts already paid on the vehicle is subtracted to the motor manufacturer. Should the vehicle not be sold within the 3 months after delivery to Ferraro's showroom, Ferraro has to settle the remaining purchase price of the vehicle at the end of the 3rd month. So just picture this whole thing. The motor manufacturer comes. He delivers the vehicles. He says, okay, Ferraro, we are entering automatically into a purchase agreement at the date of delivery. He says, you can keep this delivery on your floor, well, obviously. He says, but in the first 3 months that vehicle is on your floor, you don't have to pay me the full purchase price. You only pay me a percentage of the purchase price. He says, at the date of the sale of the vehicle, if it happens in this 3-month period, this little bits and pieces will cease and you will have to pay me the full outstanding amount on the purchase price of the vehicle that was sold within the 3-month period. He says, but in the event that a vehicle is going to be on your floor for longer than 3 months and it hasn't been sold, so the 3-month period has gone past and after the 3 months the vehicle is still there and hasn't been sold. He says, then I'm sorry for you, but at the end of a 3-month period, you have to pay me whatever you still owe me on the purchase price of the vehicle. Okay. Now, one of the vehicles in the showroom was on display for longer than 3 months already on 31 December 2018. So there were 5 vehicles initially. One, this guy was very excited. He says that it was already sold, but it's still on the floor because this guy is overseas. He says the second vehicle there has been on the floor for longer than 3 months. He says, but Ferraro had not yet paid the remaining outstanding purchase price due to the manufacturer of this one who's on the floor for the longest 3 months. So that's 2 of them. So there are 3 other vehicles which are still left on the floor, which is within the 3-month period. Now, you are required in the first place to discuss in terms of the conceptual framework whether the vehicle which Ferraro has already sold but not yet delivered to the customer meets the definition of and can be recognized as an asset in the records of Ferraro as at 31 December 2018. So the first part of the question is about this first paragraph here. The salesman was excited, the pre-delivery service was done, the buyer requested that we keep it in the showroom until he returns from the overseas holiday. Finance for the vehicle was granted by East Bank, and the first installment on the vehicle was supposed to happen on 31 December 2018. Guys, what happens if you are a motor manufacturer and your customer buys a vehicle but he makes use of some kind of finance coming from some kind of bank? What happens is that the date that the sales transaction is approved and finalized, the bank will pay the full amount of the selling price of the vehicles into the bank account of the motor dealer. And then you as the customer owes the bank the outstanding amount. So whenever a sales transaction takes place, the motor dealership receives the full amount for that sales transaction. They are not worried about who you are going to pay back. They are not worried how much you're going to pay back, and they are not worried whether you make your installments payments or not, because it's not their problem. As soon as they receive their money, they are, for all intents and purposes, are done with the transaction. So the question is, this vehicle for the guys currently overseas, can Ferraro recognize that as an asset in the statement of financial position at the end of the financial year? Now, obviously, we have to meet it on the definition criteria of an asset. So what is an asset? An asset is a present economic resource, which means that there's a right that has the potential to produce economic benefits. Is it a present? The vehicle is in the showroom, so it's very present. Is it an economic resource? So in other words, is there a right that has the potential to produce economic benefits? No, guys. The dealership has already received that economic resource. They've already received the economic benefits. So it's not something that's still going to happen. They've already received it. The finance transaction was already approved by East Bank, whatever the bank's name was. So for all intents and purposes, they are just doing their customer a favor of warehousing basically this vehicle on their floor instead of this guy come and collect the vehicle after the sales transaction was concluded. So that economic resources has already been received, controlled by the entity. Now, there's a legal contract whereby the ownership was passed to the buyer, so the sales transaction was concluded. It's a legal contract. So Ferraro no longer has the right to decide what to do with the asset, with a vehicle, when to drive the vehicle, when not to drive the vehicle, who can drive the vehicle, who cannot drive the vehicle, because it's not their vehicle anymore. Out of a legal perspective, as well as out of, you can also think, maybe say, but what about substance over form? Yeah, the legal form of the transaction is as such that the customer is the legal owner. But also the form of the substance of the transaction is as such that Ferraro no longer controls this vehicle. He just keeps the vehicle there in safe custody for the client, for the customer who's currently overseas. And the past event, well, the past event was when the sales contract was signed between the customer and the motor dealership. And then obviously when payment took place to the motor dealership, so when the motor dealership was paid for that vehicle that was sold, he's happy, he's out of it. Now the fact or the question whether Ferraro has paid the motor manufacturer already for that vehicle, that is not something that actually features here. That's completely a different story. And that has no impact in the fact whether we still can or cannot recognize this asset in our books. Now, we say under recognition criteria, the first thing is that the definition criteria of an asset must be met, and because Ferraro does not control the asset anymore, they do not meet this requirement anymore. The B part of the question says, discuss in terms of the conceptual framework of 2018 whether the other 4 vehicles which were delivered and are being displayed in Ferraro's showroom will be shown as an asset in the records of Ferraro at 31 December 2018. So there are 4 more vehicles. 3 of them fall within the 3-month period. The other one does not fall out of the 4-month period. So obviously it's again about the assets. So the question says, note, should you need to quote the same definition more than once, do not duplicate the definition. Just refer to that definition already given in a previous subsection and only apply the definition in subsequent subsections. So it's again about the assets, and we've already spoken about the definition of assets, a present economic resource controlled by the entity as a result of past events. Now, when we speak about the other 4 assets, are they present? Yes, they're very present. You can see the vehicle, so there's nothing that's not present. Are they economic resources? In other words, is there a right that has the potential to produce economic benefits? Yes. If I sell those 4 vehicles, what's going to happen? I'm going to earn sales revenue. So therefore, it has the potential to produce economic benefits when they are sold. There's also a legal contract where ownership will be passed to the dealership effectively with the delivery of the vehicle to Ferraro's showroom. So that means that Ferraro has the right to use the asset and receive substantially all the remaining benefits from the asset and therefore controls the asset. So this is this one here. Are those assets controlled by the entity? And you say, yeah, because according to the contract, ownership will pass once those vehicles are delivered to Ferraro's showroom. So they are from that stage onward, they have the right to use the asset and receive substantially all the remaining benefits from the asset, so they control the asset. So the significant risks and rewards of ownership of the asset has passed at the date of delivery, at the time of delivery, from the motor manufacturer to Ferraro. And the last one there, as a result of past events, the past event was the delivery of the vehicles to the ownership. Now let's just check the question here. As I say, discuss whether the 4 vehicles were delivered or being displayed will be shown as an asset. Yeah. What about the recognition criteria, guys? What about the recognition criteria? Now that they didn't actually discuss here, but you should go and discuss it. If you talk about recognition criteria, does it meet the definition of an asset? Yes, it does. Does it meet, let's just put it in here. I just want to add that. What is the first one? The first one says it meets the definition criteria. What is the second one? The second one says we have to look at relevance. And what is the relevance? There's no uncertainty about the existence of the the value. We know that what we're going to charge for these vehicles. So, and there is for faithful representation. There's no uncertainty about the amount of the asset. Why not? So in the purchase invoice received from the dealer, from the motor manufacturer. Okay. So the conclusion: all the vehicles delivered by the manufacturer, which were not sold at the end of the financial period, should be recognized as assets as at 31 December 2018. The last part of the question says, discuss in terms of conceptual framework whether any liabilities in respect of any vehicle on display in the storeroom should be recognized in the statement of financial position. Now, for this car that was sold, they don't tell us whether they've paid the motor manufacturers yet, But if not, then they still owe the outstanding purchase amount. So the purchase price of that vehicle less all amounts that they've paid already. For the 3 vehicles, which is still within the 3-month period, they still owe the outstanding purchase amount. And for the vehicle that's out of the 3-month period, they haven't paid them as yet, so they also owe them the outstanding amount. So where are we going to? We're going to start with the definition of a liability. It's a present obligation, so that means it's a responsibility that the entity has no practical ability to avoid. Now, they don't have a practical ability to avoid this obligation. There's a contract in place. They entered into that contract already. The contract starts, or the commitment starts at the date that vehicle is delivered at the showroom, and it will then stop at the date that they have settled the outstanding purchase amount. So the company cannot avoid this responsibility. To transfer an economic resource, well, obviously they have to repay the cost price of that vehicle to the motor manufacturer. And should they not repay that, I am extremely sure that the motor manufacturer is not only going to take the vehicle back, but there will definitely be penalties as well as other costs involved that Ferraro has to pay back the motor manufacturer. And as a result of past events, well, the signing of the floor plan contract, as well as the signing for the delivery of the vehicles, where they accept the delivery of the vehicles, well, that happened in the past, and that also then signs the commencement of this legally binding contract between the dealership and the motor manufacturer. Recognition of the liability, well, number 1, that meets all the definition criteria. Number 2, relevance. Is there uncertainty about the existence of the obligation? There's no uncertainty, guys. The floor plan is as clear as daylight, as well as the commitments under that is very clearly set out in the contract. Is there any uncertainty about the existence of the liability? No, because they've accepted the delivery of the vehicle whereby the commitment has been entered into. And is there any uncertainty about the outflow of any future economic resources? No, because I have to pay back the motor manufacturer the outstanding purchase amounts. Faithful representation, is there any measurement uncertainty? No, there's none, because the purchase price of the vehicles is clearly set out in the purchase invoice, which the company will sign when they actually accept delivery of the vehicle. So the conclusion is a liability should be recognized on 31 December for all cars delivered to the dealer, which settlement of the purchase price has not yet taken place. Effectively, it means that the purchase price, net of payments already made, of all 5 vehicles will be shown as a liability at 31 December. Now, look at this last sentence. They say, effectively, it means that the purchase price net of the payments already made. So if for that first vehicle, the payment was already in total made, then obviously there's no outstanding amount. If there was still an amount outstanding which hasn't been paid over to the motor manufacturer, obviously it needs to be included in the liability figure.